Obviously, the cycle, if we're going from the downturn from 2008 to 2012, we've started basically, and just when I mention this, and Sam and I talk about this, like, just because we mention a year doesn't mean it's going to happen like clockwork on every single year. It's variant on the economy and our own human psyche and how things move. So, don't hold people that, these are very rough predictions, and it could be out by 2-3 years or so, right? We just don't know. And that's why we need to understand the macroeconomics of how the share market cycles are moving in Australia, over in America, the crypto cycle moving as well, and then also see how that behaves, or the property market behaves based on those things as well. So if we're starting at, say, 2012 at the bottom-ish, and then we've got from 2012 to where we're at now, right? So we're coming up, like, we could just say that's like 11 years, almost a decade. And we've had a little hiccup, I guess, through the pandemic thing, right? So basically from the pandemic thing, we've kind of got like another 6 or 7-ish years or more, give or take, which brings us from like 2020-ish to 3 years now. Like, am I correct in my calculation saying we've got another few years of like, let's see what happens in the next 3 to 4 years with this? Like, is this the last little uptick? And then what do we do?
Then what do we do? Yeah, this is obviously all general, just have a bit of
absolutely
discussion.
General.
It is fascinating. This is kind of what my mind is more interested in at the moment. Obviously done a lot with everything else, but when you're dealing with people's money, I want to make sure that I'm doing the best thing by them and giving them my honest opinion. Mm-hmm. And if you look back in the history, you have to expect markets to pull back, and that's just the realities of it. If going in answering your question now is, look, the peak that they're talking about is 2027. Mm-hmm. And that's over in America. Generally, Australia lags America by about 12 months. So this is all the things that I'm learning, which is really interesting because that's pretty much in line with actually what happened. The GFC, so that 2008 was the peak there. 12 months later, we started seeing the pain here. And then what actually happens is and this is why I'm really sort of energized about it, is we're entering into the last phase of this cycle, right? And you read books, and because I'm in the market every single day, I'm actually seeing these things unfold in real time, and it's uncanny how strong a relationship there is to what they're talking about. And this is the situation I see. So we're in 2023, going to be going into 2024 pretty soon. So we've still got those probably 3, maybe 4 years. But what I'm actually seeing is our migration numbers are increasing. Last year we took 450,000+ people into Australia. We're bringing in another 315,000 is earmarked for the next 12 months.
Wow.
Our building approvals are not in line with the number of people that are coming through. I mean, we're already seeing like rentals have gone up over 10% in Australia in the last 12 months. So that's a key indication that people are struggling to find places to live. And then if you go, you go on Current Affair, Today Tonight, all that media, like you'll see these stories every now and then, people struggling to find places to rent. And then the renters feeling like it's an unfair go, and then government's changing policies for landlords and making it difficult for people to invest, even though that's the best thing for them. And then you're getting these big developers, which is really interesting, how in-tied these people with a lot of money and their connections in government systems. The build-to-rent scheme is really booming, and it's coming out. And these developers they're just cleaning up, right? They're building a whole building and renting the whole thing out. Like they're taking that hit on the way in, but then it's just heaving cash, and people are just running over themselves to try and get into a rental, and prices are going up, and they're going to continue to go up because we have a supply issue in Australia. And we've got a population that's increasing at a rate that's already in a stressed environment for supply. That's why prices are starting to increase all around Australia again. And then this is this mania phase, right, where you're getting these two key elements of high demand and lowering supply.
Yeah,
and that's why
it's wild that people are thinking like after the pandemic thing, like it went pretty crazy, like the property market in most of the world. Like, how can it continue to go up? Well, if you understand what Sam's just said, like that's exactly how. And there's like that's where we're at in the market cycle. Is like it could be a 3 to 5 year period of like, if you look at like any chart of any growth in any sort of sector, crypto, S&P 500s, 200s, index funds and stuff like that, it has this one little peak, this one little like crazy uptrend until it gets to like the top, and then it starts to slowly then does that. Sometimes it's a hectic decline, but we're talking about like that's where we're at in this 3 to 5 year period of like it could be, and this is very general for like all sort of the whole property market, not just markets within markets, but like as very general, we've got this next sort of 3 to 5 years of like crazy, like sort of steeper growth curve than typically ever in that whole 18-year cycle before it gets to that 20 and 20 mid 26 to like maybe even 28. Who knows where it could be. But if you understand how to look at these other economies, then you will start to see it coming. Wink, wink, nudge, nudge. Just check out what America does, because they're usually first, right?
Yeah, that's the beautiful thing of it. And like, obviously that's where the skill set of also, people say, when's the best time to invest? It's like when you have the financial capacity to do so, but go in with your eyes wide open.
Mm-hmm.
People will always be trying to buy a property for you, but you've got to understand, by amplifying your opportunity cost in this market, you're going to be buying into a location that has better growth potential, but also you're looking at locations that will be less affected by those major downturns. And generally your major CBDs, they do, that's where a lot of the majority of people are located, and the psyche of those buyers tend to get affected quite dramatically. Like say during COVID, Sydney pulled back that 10%, right? Whereas places in southeast Queensland went up 20%, which is just fascinating. But general public don't know these things because they don't have the time to track it every single day like I do.
Yeah. I think it's interesting that people are probably thinking now, like, all right, like if they've got some money, or maybe they don't have some money, right? But they've got one properties or two properties or maybe 4 or 5 properties, and then like, what do I do from a portfolio's perspective? And there's so many different scenarios that you can do, right? And you and I have talked about this a little bit, Stan, with like in my own personal thing of like, what do I buy next? Why? What type of asset? How? And like you said, you could buy, if you are looking to purchase, buy something that can get that capital growth in these next 3 to 5 years or 3 to 4 years or whatever it looks like. And is also not going to be too susceptible to a market downturn, or like that 3 to 5 or whatever year growth in this last little part of the upside of the cycle. It'll offset that. It's not going to be too dramatic of a hit. And then depending on what other properties people may have, is like we typically don't tell people to sell properties, but we've got to look at opportunity costs as well. So if you've got 4 properties and you bought, a couple of the last part of the cycle, you may not want to sell them because you might lose money on their entry and exit costs. But if you've got other properties that like aren't in a high growth location, you could maybe take some money off the table for a little bit and then go and, find those locations that are growing in that downturn where everybody else is like, oh no, like everything's gone to crap. And you could wait 2 years out of that like downturn of the cycle and find something, right? So there's so many scenarios that people can play out. What would you say to that, Sam?
So just reach out to us, hello@propertypals.au, and just have a chat, book a call, and we can discuss it further, because it might be, depends on where the property is, right? Like it might be an opportunistic time to sell. And as you say, take some tips off the table. During this cycle too, and this is what I'm seeing, rents are going to keep going up too. So whilst there might be, values in properties won't be as, they might be pulling back, but the rental and the income you're getting out of these things is still going to be really strong, and that's going to help you hold it. Ideally, holding it through, 4 years is not a long time,